Hello and welcome to our latest MoneyShow MoneyMasters Podcast segment. I'm Mike Larson, Editor-in-Chief at MoneyShow, and today I'm speaking with Keith Fitz-Gerald, Principal at the Fitz-Gerald Group. Welcome to the podcast, Keith.
Thanks for having me back. It's always a pleasure, Mike.
Yeah, glad to have you here. Now I want to start this out with a little bit of kudos. I know you had a 4750 target for the S&P 500 for year-end 2023, and I mean, you might have been, 2, 5, something like that points off. That's pretty spot on, so congratulations.
Well, thank you. This is a super tough business. And, I look back at that. I mean, I knew my numbers were good, but I didn't know they were that good. If you remember a year ago, people were thinking that we're going to come to the end of the financial universe as they knew it. Bearishness was all over the place. So for me to stick my neck out and say, no, we're going to have a rally. And furthermore, it's going to be 4750. And then to finish within 19 points of that, holy smokes, I couldn't believe it.
Oh, absolutely. That's great. And, I think moving forward, of course, that's what we're all looking at as investors and analysts and so on. I think you talked briefly about on Fox Business recently about your 2024 targets. I was wondering if you could expand on what you're looking for there and why you think we're going to get to that.
Absolutely. So I think we're going to come in the end of this next year, 2024. I think we're going to come in at 5,100, 5,200. I think the bulk of those gains are going to come in the latter half of the year after the Fed gets benched. There's two things that are going to drive that. Number one, the cost of capital is going to go down. Companies are going to blossom. They're going to return to capital expenditures. But more importantly, the FOMO crowd, the fear of missing out crowd, is going to realize that they've got to throw in the towel. All that money is going to come running. So everybody who's in now, everybody who's making the decision to move into those securities today is going to have a nice tailwind.
Now, as we speak, the start of 2024, all 2 trading days of it has been a little bit rough. Anything that's concerning there, or you think this is just sort of resetting for an advance as we get later into the month?
No, this doesn't faze me in the least because, one of the things we talked about late 2023 was the high propensity for shenanigans. And that's a euphemism we use for big Wall Street traders that are highly leveraged. We thought they were going to take some money off the table. I thought they would do it prior to the new year, but in fact, they held on, sucked the last of the FOMO crowd in, and then did a rug pull first 2 days of this year. So no, it doesn't bother me. The 10-year is a little more expensive, which means their cost of borrowing is a little more expensive. They're unloading. They're going to reload because you have to have buyers and sellers to move forward. So I think it's actually a good thing. It's a pipe cleaning.
Got it. Now let's step back from the immediate sort of market activity and talk big picture here. I mean, there's been a lot of chatter everywhere about the Magnificent Seven stocks last year and big tech in general. 43% NASDAQ rally last year is pretty strong. So I'm kind of curious, do you think this sector can lead again in 2024? Are there going to be other new leaders? How do you, come down on that part?
Well, to me, this is all about themes, right? This is about themes and perspective. And the reason most investors screw up or make mistakes or never get the returns they want is because they lack the long-term perspective needed to overcome the short-term chaos. Now, what I mean by that with regard to the Big Seven is digitalization in particular is probably the largest single trend in human history. So if you look at it that way and you understand where we're going with this, then I think, in fact, there's plenty of room to run ahead and that we're going to have a bright setup going forward, even if we get some selling into Q1 here.
Got it. Okay. Let's drill down a little bit into the AI boom, artificial intelligence. I mean, obviously, it's been on everybody's sort of minds here, given what we've seen with some of those stocks and just the big picture trend. So, what are you seeing in that space? And I found it interesting in a recent interview. You talked about some of the new and next developments that AI might fuel, like drug development, healthcare, that kind of thing.
Absolutely. Drug development is going to be a big one. I think we're actually going to solve many of the most vexing problems we face today. I think we're going to solve, pardon the pun, we're going to solve money. We're going to solve cancer. We're going to solve hunger. We're going to solve water. We're going to solve a lot of things that are currently greatest challenges for humanity. AI is going to facilitate that. So people are looking, they're making a mistake, Mike. They're looking at AI as if it's just another tech. They don't get it. They're not looking at it. They need to zoom out. They need to step back and get the bigger picture here. This is on par with the introduction of penicillin, with the introduction of electricity, with the introduction of the internet itself, possibly bigger than all of those things. There is not a business on the planet that won't be affected. Those businesses that do not adapt to it or adopt it in particular are going to die.
Got it. I'm glad you could point that out. If we pivot a little bit to economics, sort of the policy backdrop, I mean, you recently talked about Jay Powell, Fed chairman, being trapped in a corner. As we speak, there were just some recent meeting minutes that came out that the Fed sort of validated the idea they were done hiking, but might have pushed back a little bit at the suggestion on Wall Street that they're going to see almost immediate cuts. What's your take there?
Well, I tell you what, I think the Fed lost the plot a long time ago. They're clearly very intelligent people, but the problem the Fed has is very similar to what other central banks around the world have. They're playing with outdated models and they misunderstand the statistical probabilities of profit and confuse that with the probabilities of policy. So they don't have a rates problem. What they've got is a fiscal problem. And if you put all that into a blender and you cash it around, then I think they're going to hike rates one more time in Q1 just to prove they can do it, or because they don't want to admit that they're wrong. But either way, the Fed has set up the next three great financial crises. It's a non-issue to me. We know we're across the finish line here, and so we've got to look forward.
Got it. Excellent. Now let's talk about a few other big themes, right? I mean, you've talked about AI, you've talked about tech, you've talked about policy. Are there any particular sectors outside of those you mentioned that you find really attractive? Maybe people aren't looking at it as kind of the next big thing?
Well, again, it depends on how you define the next best thing, right? I mean, that's very dangerous terminology to an investor because they think they've got to chase the next hot stock or this kind of thing. That's a big mistake in today's market because liquidity is going to drive to those stocks that want to survive, those stocks that can change consumer behavior. So the biggest returns are going to be right where they've been for the last decade that you and I have known each other. They're going to be in the big, liquid, top of class names. It's going to be the Apples, the Microsofts. Those are the sectors that you want to continue to prioritize and focus on because that's where all the money is going to go. Many of the smaller players that we talk about a lot or people think that are going to be the next big runners, in fact, are going to get gobbled up long before they go public.
Got it. Got it. One of the things also I want to just mention to viewers, I mean, if you're not reading Keith's 5 with Fitz columns, you got to subscribe for that. Great insights into that, just sort of big picture investing. And you wrote about 4 simple investing rules at sort of the turn of the year in the calendar here. You mind talking about those a little bit? I mean, what's so important for investors to keep in mind, big picture?
Well, they've got to understand how the markets actually work, number one. They've got to understand that when they have doubt, zoom out because Wall Street wants you to zoom in and they know you're easier to separate from your money if you do. And then on top of that, you've got to have the guts, the knowledge, and the stability and confidence to move forward. So using the right tactics is key. People don't think about that. They think I'm just going to buy a stock and that's going to be it. They're going to be one and done. But the how matters just as much as the why or the what these days.
Got it. Got it. One other thing in asset class you've talked about before is crypto and sort of your bullish outlook there. I wonder if you could talk a little bit about what you see going on in that sector and what makes you optimistic, I guess, long term about the future for things like Bitcoin.
Well, it's interesting because it's not necessarily Bitcoin itself, Mike. I mean, I have a nuance here, and this is perhaps not a popular opinion. I think that Bitcoin itself is probably going to be quite challenged. But that having been said, and again, people are just going to absolutely have a conniption fit about this. But digital currency is here to stay. There's no question about that. I would rather be farther up in the food chain into the digital clearing world where I've got the institutional backing in demand. Companies like JP Morgan, for example, are going to reset the global clearing network, and that's great for money in general. I could give 2 cents, pardon the pun, about Bitcoin itself. I think it's going to have a run, but the fact that Wall Street is suddenly interested in all of those ETFs, that terrifies me because Wall Street, when you think about it, doesn't do anything because it feels like it. It does things because it feels like it can make money. Otherwise, why would they be pushing it so hard?
Got it. Got it. Well, Keith, I'm excited to see you at our upcoming event in Las Vegas. You're going to be at the Money Show in late February. Maybe without giving away too much, I guess, any sneak peek at what you think you might be talking about, some of the trends you want to help attendees learn about there?
Oh, I'm thrilled to be there. As you know, I've been speaking at the money shows for, coming up on 20 years now. And I love going to these shows because I not only get to speak, I get to meet all kinds of cool people and I get to learn stuff. So in terms of what I'm going to be talking about, I think 2024, funny enough, could be a year for the record books. Now, I'm going to talk about why that's the case, what I'm looking at, which stocks I think are going to rise to the forefront. And I look forward to seeing everybody there, including you, my friend.
Excellent. Well, Keith, I think that's a great place to wrap up. Thank you so much for your insights. Thank you all for watching. Again, if you want to hear more from Keith and dozens of other investing, trading experts, economic experts, and more, you're going to have a chance to see them at the Money Show Traders Expo Las Vegas. We're scheduled for February 21st to 23rd at the Paris Las Vegas. It's right in the heart of the Las Vegas Strip. So great location, great time, great experts you'll have the chance to learn from. Keith, thank you again for your time. Have a great day.
My pleasure. You as well.